Hi, everybody. This is Gary Dean, and this is our video report for Wednesday, August 10th, 2016. I'm actually getting this out about 12 minutes early. I have a guest coming over, and I wanted to get this out of the way before he showed up. So anyway, we've seen some selling going on with the markets today. The thing is that we're just not sure if this is the top or they're going to have another push up. But this is also how they trap a lot of traders as well, because right now we have 5 waves up. They're clear 5 waves. We have the bearish divergences. So what one would actually think would be that the top is in place and that we're probably heading someplace down into retracing at least 50%, but more likely 62 or 78% of this entire move. So we have 2171. This is your moving average. This seems to be where the algorithms have been buying, but we've already taken out, this was support right here at the 2177, and we're already through that. So if the bears can push it through this this 2171 area, which I'll zoom in on it right here, it's one of those things that we could see some panic selling that comes down to at least test the 200-day moving average on the 60-minute chart, which is down at 2153, which is pretty close to where we were on the initial drop. So what may be forming is some type of head and shoulders pattern. It's hard to say at this point, but what we know are there's numerous sell signals. This is not even close to being into oversold levels, and we're at a point right now that if broken, we're probably going to get a flush out down to the 2153, and from this level, we haven't had that kind of drop since the Brexit. So this is the problem when you have this grind, never go down more than a few points mentality, is that when you have a little bit of a pullback that would normally be healthy for the market, people panic and think it's over, and so many people have their hand on the sell trigger because they don't want to get caught holding the bag that everybody sells at once, and then what should have been a normal little pullback turns into a water slide, and we come down. But still, the bigger point move should be to the downside, even if they do need to make it higher first before lower. But 2089 would be a really, say, the bare minimum of a retracement from this move. And like I said, 2066 or 2033 would be even more likely, just because of the extended move. But if we look at a daily chart, and I'm not quite sure what happened to it. Oh, here we go. If we take a look at the daily chart, really the main thing is this, that not a lot of people are really thinking is, hang on one second, I'm just trying to, okay, is that this is a good intermediate term top. So just looking at the moving averages on it, and the reason why I'm saying it could be an intermediate top is that this was your wave 4 down here when we came down to the 1810, and right now we're making 5 waves up, and if this is the 5th of the 5th, then there's a shot that, yeah, we could go way down, but I'm not really looking at that. I'm just saying what the possibility is, because this is a bearish pattern right here, and it's calling for a move to come somewhere down into this into the 1926 level. But again, I'm not sure if that's playing out right now. Short-term targets, the bears need to push it through this 2171. From there should be a reaction trade down to the 2154, 2141 area. If that doesn't hold, then we're going to have a quick drop down to the 2112, 2120, 2112 support. And then from there, if it continues lower, then we're looking at these levels here. So I still believe that there's more risk on the long side here, and primarily because we have 5 waves up right now. We have bearish divergences on the 60-minute charts. We have bearish divergences on the daily charts. We have them on the 15-minute charts. So there's a lot that 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 the bulls are going to have to overcome if they just want to continue to grind this market higher. And like I've said a number of times heading into the elections, it's just a very, very risky move. So leave the door open that they may have another pop up. I'm not. It's not necessary because we have the 5 waves up right now. And then, maybe react if we start taking out some of these support levels. And again, the expectation is that once this tops, whether we topped already or we have another push up, is coming down somewhere between the 2089 and the 2033. So with that, have a great night, and I'll talk to you guys in the morning.